What's going on, everybody? So I just wrapped up making this video, but I did not make the intro, so I want to quickly welcome you guys to the third episode of our weekly signals recaps. This past week was very successful. We profited on 5 out of our 7 trades. Those 2 trades we lost were very restricted. We didn't lose too many pips, and they did happen to be the lower weighted pairs. So again, it was a very good week. I do look forward to trading with you guys this coming week. We're gonna have a big week on gold. But with all that said and done, I want you guys to continue to take notes with these videos. I want you guys to make the most out of these videos because these videos are made for you guys. But with that said, I hope you guys enjoyed the video. I look for again, I look forward to trading with you guys this week. And we're gonna keep pushing through because we are in a very slow area for the markets leading up to the holidays. As the majority of you guys may know, leading up to the holidays, the markets have become very slow. But that also ties into the upcoming elections, as well as the newfound restrictions on COVID-19. So, as I mentioned again, it is a very slow time for the markets. We are pushing through. We are going to be making more money leading up to the holidays. And I'm just very excited because the holidays is, it's a very cheerful time of year. And it's going to be a good time. We are releasing our new program. As I mentioned last week, we're releasing the program November 5th. So keep your guys' eyes out for that. But again, I don't want to hold you guys up too long. We're going to jump right into the video and break down these past week's trades. Take care. So, kicking off, we're going to start off with our USD CHF swing trade. We did about 40 pips, which is extremely low for what's considered to be a take profit goal on a swing trade. But this overall trade was not supposed to be a swing trade at the start. This was supposed to be an intraday trade. And the reason for my personal opinion on holding the swing is simply because we fell into a low area of consolidation along a lower support. And that lower support happens to be this very skinny but effective support line, which did hold up until the trade reached back into profit. So this dates back to September 3rd, where the market completely rejected off, forming the first touch to the now founded support line. Market moved below, immediate rejection. Keep in mind we are on the 4-hour, so there was an immediate rejection on a lower support, which I do have marked up right over here. As you can see, the market does fall below that support line right to about 90.48. However, we are not going to keep our support line that wide. That is too wide. And I'm not trying to compensate for the lower wicks. I'm just simply trying to get that vague price point. So, market moved back above. Nice area of consolidation as well. That's about 50 pips of just pure sideways trending. Market finally breaks back above before an immediate retest down to our now new zone low. Now, the reason I'm keeping this as my zone low is simply because this is when the market decides to make its first move back above. Now, while we do have this short area of consolidation that does hit a price point far lower than our actual zone low, I don't want to keep my support line at that bottom zone. I want to keep my support line where the market actually decides to move into the now founded zone trade. So again, my new zone low is going to be the lowest point in which the market actually made its move to form the zone. So once we had our support line formed, market moved back up, moving at a price. I actually want to see how high that price point was, how high that jump. We had a jump of about 223 pips before the market reversed. That's a huge gap in the market. That's a huge move in the market as well. That actually ranged for about 7 days. So just over 1 week of trading, the market had made that huge bullish increase. Now I'm going to jump over into the 1 hour quickly so I can show you guys the actual markup of the trade itself. My entry price was placed right inside that area of traffic. So we had the market move back above, huge wick to the actual zone, huge wick to the new founded support line. Market moved back above, forming a mini head and shoulders. Once it broke back below, market immediately retested the zone before making a second push down to our new zone low. So now as the market moved back below, we had an immediate touch to the lower zone support. Market moved back above. 3 direct touches to that newfound resistance, now going to be our entry support. Market moved above once again, and the market actually didn't touch that zone for about 20 days. Market comes back below. I should have placed my entry after the market broke below. I actually should have entered at the lower support, but again, I expected that higher support zone to be our ideal entry price simply because of the amount of consolidation and traffic around this area. Now, The reason I believe the market slipped is because we had two direct touches after. So the market broke right through, it broke right through once again, and a third break that should have invalidated the support in my eyes. But again, the amount of traffic around that area, the amount of price action and movement inside that price zone is what validated the line for me. So ideal entry would have been at the lower support. I didn't expect the market to actually reach that lower support as well. But again, trading a downtrend is a very, very dangerous game. As you guys also know, the market didn't hit our stop loss, but as you guys can see here, the lower support is the ideal range. This area of consolidation not only validated that the market was going to push back up after we had that break through the first support, but again, it also validated that this again is the ideal support line, and that should have been my area of entry. Now, again, the market did about 40 pips. Once the market broke through that downtrend resistance, that was my ideal tick off that the market was going to take off. That's what told me, okay, we're going bullish, market's about to fly, we can hold this position. But I chose to take off the 40 pips, and the reason for that close is simply because we are still at a downtrending side. If we go on the 4 hour, you guys can see we still are on a 4 hour downtrend. We are currently sitting at an area of resistance where the market has actually not broken through, it's just continued its sideways trend. I'm gonna mark that up there for you guys quickly. So right about, I'm gonna place it right here. Now again, I know it's not really a clear-cut resistance line, but you can see market activity above, current market activity inside. This is the 4 hour chart once again. Heavy sideways trending, and more sideways trending. So I'm gonna open that up in the 1 hour so you guys can see. Along that zone, we have absolutely no price swings or movements, just heavy consolidation inside that zone. So what do I think the market's going to do? I do think it's eventually going to take off bullish. Do I think it's going to take off anytime soon? I don't think it's going to take off until Tuesday. And again, we are just sitting at a very confused area in the market. So with that said, that's why I closed my market trade. I didn't want to hold this trade any longer. I just wanted to get this trade over with, take my money, and I just wanted to leave. So again, we did about 40 pips on this trade. It wasn't the best trade. We have a clear-cut point for where we could have entered. We've discussed where we went wrong. We've also discussed where we think the market's going to go forward. So I think we're going to have one more retest to the trend line before the market takes off above that traffic area, that area of resistance. But nonetheless, we're going to hop into our next trade. Jumping into our next trade here, we have EUR AUD. Now this trade did hit our take profit for 70 pips. I did actually as well have two orders placed, as you can see here with the second entry doing 22 pips. And we're going to break that down right now. For starters, off the second order's placement, I could have definitely taken profit much earlier. I did close just before entry, and that's simply because I was not actually analyzing this trade at the time. Right when this trade had surged back up towards our entry, it was about 6 a.m. I did wake up around 7 or 8 o'clock to close this trade manually, and I definitely could have set a shorter take profit. I did expect this trade to break down through the two lower supports. As you can see here, we did have a nice rejection off of the 1.6344 price range in correlation with this uptrending support area. So again, it was a mistake on my part for the second entry. But as for the actual analysis on the original order itself, it was a nice breakout trade. So we did have two consecutive areas here. I'm going to go on the 4 hour chart just to give you guys a better idea of what exactly is going on. Just widen this a bit. Okay, so for our sell position, we did have a nice breakout pattern forming off of a downtrend with as well an uptrend formation, giving us that nice wedge pattern formation. I have my peak price point at 1.6337 and my lowest support zone at 1.63. So working inside the 63 and 65 ranged zone, we have two areas of lower support giving us that nice wedge pattern formation, confirmation and confluence. Now what do I mean by that? I mean we have a nice area of support correlating with a lower zone on the uptrend. That also gives us a nice area of consolidation to work with. So I'm going to put those in the boxes right here for you. Nice area of consolidation off of the lower wedge support. Off of the top wedge support, we have three direct touches. Market crashes right below, giving us a second area of entry. Now what's this? This is just above my original orders entry from last week. As you can see, that did hit our stop loss. If you guys want to watch that video and you haven't already, go ahead, we'll go back to it. You'll be able to see that nice trades breakdown and why exactly I was wrong here. But following up with our actual breakdowns here, we have a nice area of support, previous support that did reject immediately. A nice break on it to hit our take profit from 2 weeks prior to this. Market had not really approached this zone previous to that. As you can see, there's nice immediate breaks through. What does this tell me? It tells me that the market has not acknowledged that area as any significance. Of course, up until we had the retest on my previous trade from last week. I'm gonna go and I don't know why my favorites bar is down there. So right here you can see nice break, retest, and that gives that area of former support, new resistance. That gives it new value, a new meaning on the markets. Prior to this, there was no value on this 1.6428 price range. Market had not established itself at all. Nice retest, second retest again, break, break, break below. Nice rejection off of the support, reversed, boom. Third touch validates that price range, and now that area of 64.23 is now a valid and important price point. Market surges below once again, starts to form that consolidation as well as that uptrend that I spoke about a little earlier. Market breaks through this area of former resistance, surges up, starts to form again and respects that downtrending line we have here. Immediate rejection once again down below off of this former support, new resistance. Getting near our stop loss, but it wasn't too big of a deal for us right there. Comes back below, starts to form that wedge pattern once again. Several touches to the top, several touches to the bottom, validating that uptrend line. And once we entered, I was not too sure when we were going to have the break. I expected it to consolidate a little bit more, but once it broke below, that's when I entered our second position. Why did I enter that second position? Well, I entered that second position because it did break below that area of support I mentioned earlier. But one deal I want to make very clear right now is that I could have taken profit again earlier, as I mentioned at the beginning of this breakdown. But second is I definitely could have acknowledged that this lower support had been broken several times before. So again, it wasn't the best second entry that we had. We've had much better second entries before, and this is just one example of how exactly it could go. But again, we did have too many lower support areas that I failed to acknowledge going into this trade. And so with that said, if you're going to place a second entry, whether it be a buy or a sell position, I do recommend looking for secondary areas of support or resistance above or below your actual entries. I want you guys to make sure that you're not entering into a second position near a current and active support or resistance area. But nonetheless, we can't really do anything about that now. The trade did reverse off of this area of support, surging back to our stop loss. Again, we did close at 22 pips, a very, very small trade, but it's extra money nonetheless. Once again, trade surged back up, broke above this support, retested it once again before taking off. Now, this trade really did take off. This market is well above the zone it used to be in. Of course, you guys can see it's respecting that former resistance, acting as new support. But again, I do expect this trade to break out once again. I expect a nice little retest to a lower price. I'm thinking around the 160, I'm expecting a retest to the 65.20 area, just a little bit below here on the right side, but I expect this trade to go up a little bit more, try to break above that current zone peak of 1.6588. This is going to quickly wrap up the EUR AUD breakdown. We're going to jump right into our next trade, which is going to be EUR JPY. All right, hopping into this EUR JPY breakdown. It's a very, very simple reason as to why exactly I lost this trade. For those of you who aren't too familiar with trading just yet, you guys may not see it as easily as the other traders, but a very simple buy we had here on an uptrending wedge pattern. Now, the reason as to why exactly I took this trade, very simple. My confluences lined up with an area of former resistance, new support, as well as an uptrending support line. So to many people who trade trend lines and support and resistance crossovers, this is a very, very nice opportunity for you, as was it for myself. But if you guys look at the 4-hour chart here, it was a 4-hour lineup. That 4-hour candle immediately just slapped down below, coming really close to our stop loss. Secondary support line here immediately broke through. Trade hit our stop loss and we were immediately out. If I open up that 1 hour chart here, you guys can see trade dumped immediately below and is now moving into a W bottom along this temporary support, heavy resistance zone. So again, that reversal was very, very expected. Expecting it to retest that former support and dump off even further. But going into why exactly this trade hit my stops and why exactly I missed this sell opportunity is all very, very simple. If you open up the 12-hour here, you can see we are in a very, very high position on the 12-hour chart. Nice head and shoulders potentially forming, but the overall trend of the market was a downtrend. We had a nice breakout formation on the wedge pattern. Once that trade broke out of that trend line, I should have closed that trade immediately. This trade was a very, very in your face. I could have easily spotted this had I opened up the 12-hour chart. And you can even see here that we are just below an area of former support. But again, I did ignore the higher time frame, something I vouch for very, very heavily with new traders. Always check your higher time frames. If you don't want to go into the daily, because the daily is very, very vague, I recommend opening up the 12-hour, which is why I have it bookmark on my screen here. Very easy trade. I could have easily fixed my opportunity, hopped into a sell position, and capitalized on that very, very harsh dump off. But again, I fumbled that bag. We're all going to fumble bags from time to time. I missed out on about 113 pips. I'm going to say 120 pips total. It's EUR JPY. It's not a heavily weighted pair, but with that said, no excuses. I missed my sell opportunity off of the 12-hour chart. We're going to jump into the next trade. Hopping right into AUD NZD. We have another stop loss spike. I just closed my chart. We lost about 40 pips total on AUD NZD. Another mistake made on these charts. Second loss, but our only other loss for the week other than EUR JPY. It was a downtrending support crossover. Now, this trade was very, very simple. We are on the 4-hour chart. Keep in mind, this is not the 1 hour. I did make the mistake of entering at a crossover point. This was a downtrend breakthrough meeting a uptrend crossover. These trades are not too common, but when they do come out, they are made very, very profitable. They are highly profitable opportunities. I happen to be on the other percentage of this trade that does hit stop loss. Now, the reason for my entry, you can see here, we don't have a clear-cut support zone. We just have a high traffic zone. A couple touches, a couple reversals off the break above, but nonetheless, we do have several breaks below, evidently leading to my stop loss spike. Now, if we go over into the 1 hour chart here, you can see we did have a high area of confusion. The market reversed twice before a nice break below. Now, when we did have this huge bullish 1 hour candle going into profit, I did think that we were in the green zone. I did think we were going to be in a profitable position, at least until the 0839 zone. But as you can see, the market did reverse right under and target our stop loss immediately. I did have this secondary support below placed. This was the more consistent support zone. As you can see, there was a little bit of a reversal approaching that price point just to the lower zone. But again, market reversed off of the downtrending resistance and then hit our stop loss to break even further below. So very simple mistake, very easily explainable as to why exactly this happened. We did respect the downtrending resistance. I am going to keep an eye on that resistance going forward. But going into the later weeks, going a little bit further, I'm thinking in the next 2 weeks, we are going to see a break above that resistance. So this is a chart we're going to keep in mind going forward. AUD NZD is going to be on my watch list. I did mention earlier in the week, let's see if I can find it too. I did say I was going to stop trading this pair. But after further analysis, I will be keeping my eye on this pair because it's something I want to get a little bit of revenge on. Now, I'm not endorsing revenge trading. It's just, it's something I got to do. But we're going to hop right into our next trade breakdown, which is gold. So see you in a second. Jumping right into our gold breakdown here. I'm going to have to touch base on our previous gold trade that hit take profit last week, just so I can give you guys a little bit more of an explanation as to why exactly I decided to buy off of this 1890.50 price zone. So last week, we had the beginning of an uptrend form, nice accumulation phase leading up to our actual market's entry price. Accumulation also means consolidation, in my books, the area where the market is gathering more orders. And so off of the take profit release, we had a nice temporary area of support form before the market dumped a little bit more below. Retesting once more, testing out the bullish momentum before a further bearish dump towards our entry price. Now, our entry price is right inside the middle of the accumulation zone. Right inside here, this gray box I have lined up, you can see there are several areas of market touches, nice huge bullish wicks to the highs, nice accumulation zone inside the accumulation zone, talk about inception, where the market is giving us touches to the above and lower areas of support and resistance. Market breaks above once again, respecting the top resistance of the accumulation box. One more break before a nice reversal once again to test the lower support. Now, this box runs nice over into our current entry zone. We had one wick to the bottom of the uptrend pattern formation. So again, that lower wick starts the form of the uptrend pattern, but inside of our entry price. Now, going into our entry price, we had a nice area of accumulation once again. I'm going to give that a nice little mark up there so you guys can see. Very, very similar to the one we had in the accumulation zone. Right along that price point, actually just a little bit above, the wicks to the lows do test that entry price. Once we entered, the market opened up, nice into profit. Nice little retest. Now, that retest here is a key factor in our actual entry. That retest perfectly touches our entry price accumulation phase. I want to get that. I want to get this marker out of the way so you guys can see. So again, that accumulation phase formed just above, you guys can see this lower support, is testing the resistance of our entry price. So once the market moved in a profit, of course, after testing our stop loss zone, the market formed above, nice area of support, which I have marked up, moves into profit, and this is exactly where we hit our take profit. Now, for those who are not too familiar, why did I place my take profit there? Testing the former prices zone, we have a nice area of new resistance. Market approached right away. Once I saw this candle forming, I waited for it to retest the bulls once more, closed out the price, and the market moved back down towards our entry. Now, as for our entry price, you can see right above, there's a nice area of support. Now, even though the market did break below, I want to show you guys that this price point of 1894 was very, very prevalent, very important to our market's execution, very important to our entry price, and it is going to be withholding moving forward. So again, I want you guys to understand this breakdowns. Gold is my main pair. It is the pair I have only mastered in the last 2 years, and it's the pair I continue to trade going forward because it is very, very reliable. Now, by reliable, I don't mean an easy pair to trade. It's just something that I've worked on time and time again up until this point. So again, for those of you who are not too familiar with gold, for those of you who are too nervous to trade gold on your live, shoot me a DM and we'll just talk it over, and we can even schedule a call if I see that you are willing to put in the work moving forward with gold. Now, this is not something I'm going to do for everyone, but you know, if you are looking to talk trading gold, then we can schedule that call. I don't want to get too carried away, but anyways, as for gold moving forward, I do see a bullish push once again, at least to the 1920 zone, based on the consistency of this uptrend as well as the support line that is currently being worked here. So that's going to wrap up this gold trade here. Nice little breakdown for you guys, and we are going to hop into the last trade on our list today, which was GBP AUD. So let's hop right into it. GBP AUD, GBP AUD. Did about 155 pips on this trade, hitting our stop loss and ending off this week really, really strong. We had a nice little uptrending support buy off of the 4 hour, and you guys can see this was almost a sniper entry. Sniper entries are wick candle entries where the price actually didn't close below, but nonetheless, it was a very nice trade, very beautiful, and I don't have this box inside that zone, so I'm gonna. No, I can't. Ah, man. Okay, so anyways, entered off the 4 hour markups. It was a 1 hour candle entry, and it was just a little bit below our support zone. So why exactly did I buy where I did? I'm actually gonna open the 4 hour here. It's a little messy on the 1 hour. I entered based off of this 4 hour support. You can see it's been tested several times before. A little bit of a breakage below to test the zone's current low. Let me get that on the screen for you guys as well. I want you guys to be able to work with what we have here. So again, market broke below, testing the current low, which is 78.46. Market has not reached that low since, and after that we had another retest to the low, the secondary low, forming the uptrend pattern at about 78.95. Now this is very important because again, we did have a break below 4 hour candle, but the market did not maintain a lower position. The market could not maintain that low of a position. Market maker needed to retest and regain his traction in the market, so he moved back above that lower support zone. Now we did have another, I want to get this off of auto, did have another retest October 9th. Market moved right back above, and as we came up to our entry price at about 79.88, the market broke below once again. Now, why was I so confident on this trade? Why did I believe it was going to go back above? I knew it was going back above because the market cannot maintain a position that low. This is called a trapping phase, where the market is consistently testing the low, but the current low that you are at will never be lower than the previous low. What does that mean? The market maker is trying to get you guys to sell. Market maker sold off here below at 78.48, moved back again. It trapped all the sellers, getting them into their stop loss trouble. They don't want to close in a loss, so they keep holding. It's called the trap move. Sell here, market moves again below. They think it's going to get low once again. They think it's going to hit their entry price so they can close out with minimal losses. Psych, doesn't happen. Market moves back up again. Consolidation, consolidation, consolidation. Dips the low once again. If you guys can see here, let me open up the cross. You guys can see that low is nowhere near that entry price. They're forced to hold once again. Market moves up, consolidation, consolidation, spikes high, hits some of their stop losses. Those guys sell off. Once again, it hits below, market moves back up. It's just a trap formation. I don't have the correct term. I haven't used that term in a while. I'm not very good with the Forex terms if you guys haven't already learned. Something I need to work on because, of course, this is what I do full time, but I have not gone into my terminology, so I'm just going to call it the trap phase. So again, sell, moves back to entry price, doesn't get near. They're holding, 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 sell again, holding, holding, holding. And that's why I chose to buy. I'm familiar with how these things work. I am familiar with how consistent uptrends are. And I'm very familiar with GBP AUD as it's one of my main 5 pairs. So again, placed my buy off of those 2 confirmations of support as well as the uptrend. Market moved directly into profit, hitting our take profit, retesting just above our take profit for a second buy opportunity. That is a retracement phase, which is right above my target price. So once again, I do believe this price point is going to retest my take profit zone, which is at 81.45. I believe we're gonna have one more retest before the market moves once again into a bullish push. But if it doesn't reach that low, there's another buy opportunity at 1.82. So it's either 1.82 or 1.8145 where I'm looking to buy. So that's going to wrap up this GBP AUD breakdown. Again, a very quick breakdown. I try to make these as quick as possible for you guys. If you have any more questions, if anything was not explained to your liking, please shoot me a private message or comment down below. I will be looking at all the comments and messages going forward. I'm appreciating all of the support you guys are giving to these videos. I'm appreciating all the feedback and DMs you guys are giving me. I am keeping in mind everything you guys are sending me. So again, if you have anything you want to let me know, if anything you want to see in the future videos, please don't hesitate to reach out. I'm working on these videos. I'm trying to make these videos as in-depth as possible while maintaining that, very reasonable time length on these videos. And I am only making these videos for you guys. I do not make these videos for me. So again, if you guys want these videos to be good, if you want me to keep making these videos, keep supporting them, keep liking them, and keep shooting me messages. But with all that said and done, I look forward to trading with you guys this week. We're going to have a big week on gold. I have a feeling about it. And, yep, that's going to wrap everything up for this week. So take care, keep working hard, and I'll see you guys next week.